Hello, 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 everyone. Happy PCE Friday. How's everyone doing today? Good morning, Ted. Good morning, Davey. Hey ho, Yo-Yo Friday. Bad day, but gamblers betting. Well, probabilities still say we're going up. And what do you mean insanity? It's month end, too. You're going to see some squaring up moves. Month end's a interesting day. By the way, if you're a super short-term trader, generally I'd step away unless you get major momentum bars or a very strong pattern. It's just not worth it, especially after we've had a major sell-off into the retest the low areas. You know what? There's some days it's just best to enjoy the day. Happy crispy fall Friday. What's the temperature there, Patrick? It was 44 degrees here walking the dogs this morning, and we still are ultra oversold. Good morning, Christo. You went long. December contracts for the S&P. For the are you trading the minis or the okay and the mint? You went long both the micros and the minis. It's hard to read there. Good morning, Martinez. Fang's starting to drop. It's been dropping. Good morning, Options 22. Morning, Jake. I think the NASDAQ is, yeah, the NASDAQ is going lower longer term. You got to put things into context. All right. Remember on the last major rally up, and everybody's saying the June lows are in, it's buy. We're going to new, the lows are in. Well, the lows weren't in. We're going to get another rally. We're going to get another rip your face off rally. And then we'll have the banging of the mantra, the lows are in. The lows are in. All right? This is where you got to put things in context constantly and don't get hung up. Put everything in a time frame. Yes, from the probabilities, we're still going lower longer term. At some point, we're going to get another rip your face off rally. The PCE numbers were ugly, and this is why, just from a psychological level, we're still not there. All right, PCE, preferred Fed measure of inflation. Core, higher than forecast by 0.2 percentage points. The month over month, higher by 0.1. We got the Fed speaks now also. Month over month 0.3. Personal income coming in as expected. Personal spending still higher, but people are draining their savings accounts. So then the mantra is, well, yes, it's backwards looking, but this just keeps reinforcing that the Fed can't ease up sooner rather than later. But the bull case is, well, it's backwards looking. They're going to still pivot. I've heard it this morning already. They're still going to pivot as backwards looking. But if that had come in better, they'd say, see, that's why the inflation's under control. So there's always an excuse. That's why don't get blindsided either if you're bullish or bearish. You got to analyze it both ways and do the probabilities. That's why we have long term, medium to long term, and short term things we look at. Because you got to put everything into context. Chicago PMI, 15 minutes after the open. Big thing there is how much it stays above in the expansion territory, which is 50. Consumer sentiment, final numbers for September. I'm expecting that to come in pretty much in line. But if the inflation expectations come in better, it will be used for a rally. Remember, we're in a severe oversold, and there'll be some squaring up going into month end. 10 a.m. Central, Bowman speaking. And then we got rig counts, and we have Williams after the close. The market map, pretty mixed this morning. Nothing major, though, yet. Fed watch contracting a little bit on that 75 basis point. Still in negative gamma, so we can still get the oversized moves. Fear and greed still at 15%. Earnings, nothing that I'm picking up on. There's nothing after close, and we had Carnival before the open, but nothing I'm looking at really. So, key levels I'm watching. I have the official stops as triggered last night. Go hitting the first target The first target right between the 50 and the 62.5, and then rotating down, we got the spike thing. The official, if you're going to walk away from the trade on a raised stop level, the official, and it can always be higher than this, so I'm just putting up the official, is 36.40. No trade below that, pretty close, but no trade below that. The closing on a 1 hour basis is 36.49. Other than that, the bullish pattern is still in place. The VIX, even though this is delayed on this platform, has hit the first target on my other platform. And this is delayed. I wish I could get the real-time data for it. They just don't offer it for some reason. Very strange. I wish TradingView would fix that. But so even on a bounce in the VIX, unless the VIX gets substantially back above this 32 level, got to stay in some slight bullish mode. Or if we get the double stopped out, then I'll go to more choppy mode. Other than that, what do we have? The breakdown from the flag. That's what I'm watching on any rally into the open. 36.61 is now pretty key resistance. So if we rally back up there, I'll watch for the potential rollover play in the short term. Let's see. Who's else do we? All right, Crystal, you trade the micros only. Smart. Heat wave in Minnesota, 51 degrees right now. Well, it's warmer there than here. Wow. Morning Legion. Market could have sold off after inflation figures. Yeah, it's still bounce. It's going to be interesting. It's not. I see stuff scrolling by on my Twitter. End of month plunge protection team. Guys, please stop with the friggin' plunge protection team. And I'm not talking to people in here. I'm just, the plunge protection team doesn't show up every friggin' day at end of month. It's just squaring of positions. I'm ready to have my face clean off. Well, the best thing to do is sit on your hands then. Coco, please stop. We may rally, but it's not to the moon. It can always go lower. Well, bull markets break the rules too. Again, remember on the way up, it was overbought for extended periods of time. Things can be overbought or oversold. It's just the trend. The trend continues until it doesn't. The key thing with this market, though, is until it gets a close below these June lows, which no close yet, a close will be a very different story. Then we might see the flush out move. But we do not have a close yet below that. That's going to be the big telltale one, especially on the S&P. Really watch for that close below the June lows. That's going to shake people. Good morning, Lauren. Placed my stop right at 36.40 accidentally and got stopped out right at 36.40 on the PCE spike. It happens. Hey, there we go. Moon Unit Zappa. Hey, Frank Zappa reference. So if you're just looking here, again, pay attention to, especially on the future side, but the key lows from, you can also watch the cash just for that close below there. The key level to watch for is 36.42 on the futures. On the cash, you're going to be watching, you see right here, the key low is 36.87. That's the level, especially to focus on today if we do head lower. Those are your levels you're watching. NASDAQ, we did have a nice flag pattern that did break down. NASDAQ, remember there was no little mini double bottom pattern. What I'm watching for is this breakdown. Still could not get the close on a closing basis on that 1 hour at 9. I'm watching if it holds up about 11,200. On a little rally, 11,250 for the potential rollover play. If we start getting above about 11,275, watching for that bullish to resume. Again, these are short-term patterns. Short-term patterns. So what else do we have? Oh, I guess if we do break to lows, here's another area. If you're trading on the short term, this is another way to use your reverse harmonics from this key level for the short term, like intraday trading. So if we were to break down, especially below 11,156, retest the lows, you break the lows, you now have a cluster here, 11,069 to 11,059.50. And then you have another key, very key area. So that's how you can use the reverse harmonics. And that's really on this little short move for day trading only. The Dow key levels about this 29,150 and then this 29,65 and then the retest, and you that's really what I'm watching. To break out to the upside about 29.4 again. I'm just going to blaze through a couple of these. Russell, again, you have a lot of flag patterns. Lots of flag patterns. And here's where you don't. I just want to reiterate something. You see how it closed below 62.5 before on this run up? And it already hit the 87.5. So if you're watching the 62.5 for another close below it, that play is already done. Okay. Let's just get through. Almost wiping out the double, but not yet for the DAX. Your key support coming in about 11,950. Key resistance 12,146. Notes. Yes, this double still is in play on the 10-year note. So that's what I'm going to be focused on. Not really today, but next week. Why is I'm watching it, even though you see on the 4-hour this going into the wicks? Because on the 1-hour it's still valid. All right. And my main area I'm focused on is this 111. 111 is the key. And now this hasn't even confirmed yet, so this may go away. But I am still watching it, and that's why, if you're wondering why it's still on here, even though this cuts through the wicks, it's valid on the 1-hour. Main target I'm focused on, again, is that $111 index. The rotation back up. This was an aggressive buy. Aggressive buy. Why? Because it's only confirmed on a shorter time period. And you still have the little channeling pattern in play. The only thing is it's retested this level and so far holds. So if it does get the rally on about 112.75, then it's going to be the stronger rotation back up. You still want to watch that 113 area. We already looked at the VIX. Crude, after finishing that double, not much going on with this besides back into key support becoming resistance and rotating back down, but there's just not a strong setup right now in crude. Wouldn't bother doing, from my perspective, nothing going on. Natty gas still between the rotation zone and the 200. Nothing going on there from the short term. Long term still bearish. Yen, still keeping an eye on this closely. Not necessarily for today, but I will be focused on this Sunday night, especially about 144.85. We start moving up to there. That can wipe out the full Japan intervention move. So I will be focused on that Sunday night in case you don't tune in again. Euro, wanted to cover this. Again, you don't know which ones are going to work and which ones aren't. You have to follow the probabilities. You had the double trigger, nice little pullback. First level, second level, third level hit, forming a double top. Right at the key final third targets, little double top. This one was pretty much a profit taking because at least on the 1-hour you couldn't get in it. You could get in it on a 15-minute, which it was valid on. Trigger, little retracement, first target hit, second target hit, third target hit. So both those doubles are off the table. Just wanted to highlight those. on a retracement move now with the euro. Since both the patterns are off the table, we start breaking below about 97.35. 96.95 is the next target area. If for trading intraday, when I have a target area, especially 50%, just beyond the core number, I would make it 97.02 about. And then your majors coming in 96.55. And you see that prior key support there. So you have a harmonic lined up with that. Let's me get to back to comments. Do flush up move usually happen at the beginning or end of week, or is it just randomly driven by price action and events? It's more significant with price action and events, especially in a market like this. On the fundamental, companies are starting to announce layoffs, which is bad news, is good news, and that Powell wants higher employment from the lower rates. Again, the narrative just keeps changing. Just focus on, that's why I focus on systems. The narrative is just interesting. But remember, the why is going to change, so this is going to change, and they already said they can establish a lot higher unemployment from here. We could bounce up a whole percentage point and it would still be in their bounds. So, and I'm not a fan of the Fed. And people are like, well, you're just defending the Fed. I think the Fed should be trashed. They were wrong on the way up. They're going to be wrong on the way down. However, for all those people thinking Fed should stop hiking rates, and then what? What if inflation dips and comes back? What if they don't get it under control? Then they were wrong both sides, which would just reiterate, I'm tired of trying to micromanage stuff. If we actually have a free market economy, which we really don't anymore because of all the intervention on multiple levels, you'd literally have the Fed as the lender of last resort and only be involved due to a crisis level. But now it's trying to micromanage everything. And that's where these politicians and the Fed, and I'm going to put they're technically separate entities because the Federal Reserve is a private entity and not run by our government. I think they, trying to micromanage everything either on a governmental level or a Federal Reserve level is just idiotic and inane. So why don't you just give us a free market economy, which we do not have? That's me from my libertarian point of view. So get out of our way and let stuff trade. And yes, there are downsides to capitalism, like absurd greed and everything else, but it's way better than socialism or communism. And crony capitalism sucks, so get it out of here, which is what we friggin' have now with the government picking winners and losers and everything trying to be micromanaged. By the way, if you don't like my rants, you might as well unsubscribe now because you're going to be getting more of them because I'm friggin' sick of this crap. Any mention of Russia? I retweeted a couple things. We have the Putin speech that was going on right before. It was pretty much an attack on the West. Although I saw it mention something about talks with the West, but that's gonna you talks with Putin. It's polarized. You're gonna eventually. You have the alliance, Russia and China, and that's it's gonna be the ignorant West. Oh, it's gonna do this. It's just all a bunch of garbage. And you know what? I don't even need to get into that. Shorts need to let go. And I don't know. Big bloated. We'll see. Unless we get the capitulation move before that, but you got to watch that June close. I catered a job at Ernst & Young today and had heard a rumor of the conference is just a layoff convention. I like this little stuff from the ground, though. So if anybody has ground stories like what Christo just put in there, that's always good to know. That's why I talk to people and follow a lot of stuff, because that will tell you a lot. Just the fact that you still have so many people pivoting with the Fed, the narrative is, and they're going to say once we start rallying, see? And then when we roll over again, they're going to all shut up and go back to their little holes. Unless, and that's my viewpoint, unless we trigger long-term buys. If we trigger long-term buys, I will need to shift to go with the probabilities. Yeah, fives. I'm done with the Fed speakers. Oh, I need to get to the spiders and the Qs and I'm just sorry, going on rants today. Spiders, the thing I'm just watching is for gap. For gap fills, I got to reverse these based off the price action yesterday. I'm more focused on the futures. But the thing will be for the gap play, and if we retest the 359.72, which was the harmonic prior, if you want anything else, let me take these off for a second. This is where you don't have the reverse or too much right now, or too little. You can still use them. But going into next week will be 358.15. Key support, again, this is yesterday's low area. There's just not... I would not force anything today. First thing will be the gap fill today. The Qs, besides the gap fill, you have key resistance now at about 273.12. So on a continued rally beyond the gap fill, that's the thing I'd be focused on besides using your short-term harmonics. Oh, we have Magic Robot Day, don't we? Does somebody have the time frame for Magic Robot Day? Tesla yesterday holding the key support down a little. I'll just be watching for the gap fill today, your next support, and on the closing basis to see how it closes in reference to 265.73. You have that silly AI day coming out with them. So on a rally, 271.74 and then 277.75 would be the key targets upwards. You can always reverse your You can reverse your harmonics at this point, which are virtually the same levels. And this is the prior breakdown. So if you fill the gap and continue to rally, this 271.75 area is pretty key. And then 277.78. You break down below this 265. We're trading right there going into the open. You have 259.70 and then 253.71. Mind a gap still from back in July. That is the next major. Should we finally start breaking down at some point, that's the next key target area. Oh, boy. Yeah, we're going to see gas prices go up again at some point. Tesla's not really getting killed. Down 3 points. That should be a gift for the people who love to play gaps. Hey, Andrea, welcome. Ted likes the libertarian point of view. People don't know any better, so stop getting in your own way. My Gardner says it's going to cost average on BBY, on Best Buy, or are you just talking Best Buy? Not BBBY, Bed Bath & Beyond. But see, whenever somebody has something losing, it turns into dollar cost averaging. Well, I'll just buy more lower to lower my average cost because it's only a loss when you sell. You know what? This is where people will grind the thing all the way down. You're better to take losses unless it was in your trading plan to build a core position. You take the losses. You free up the capital and wait for the trades. Why is our government trying to get us in a two-front war, Europe in position? Yeah, I don't know. It's insanity. We live in insane times. And weren't the Democrats? I'll pick on everybody because you know who I am. But weren't the Democrats anti-war? Now they're like pro-war. Everybody, this is all garbage. Let's flush them all down. Can we start over? Please? And can we get people from their friggin' 70s out of office that should be retired? Go take your money and go live in Costa Rica or something. Just get out of our way. Oh. Snow has triggered the daily double top, is currently showing a potential double bottom. And then let's just, the markets are open. We can look at snow after the close or something. It's triggered. Would it's? We'll look at that after. Take a look. Let me just peek at the S&P. Then I gotta go. I'm 8 espresso. I couldn't wake up this morning. I'm 8 espresso shots into it. By the way, probably why you're getting more rants. Let's just see. Still no trade below that 75 is very key. Again, on the rally, watch for the break, to retest that breakdown zone. No, this would not be a double bottom, by the way. So that's what I'll be watching for going into the month end, but I am prepared for some back and forth price action. I like the fishiest is real. That was supposed to say the disgust. Stupid autocorrect. I hate. I like autocorrect for when it helps me normally, but when it completely does something wrong, I say the same thing. Stupid autocorrect, and I'll leave it as that. See everybody on Twitter. Thanks for doing the Twitter stuff, Sterling. I will talk to everyone after the close. Have a fantastic day, trading day. If you don't have much to do, don't put capital at risk at month end. We'll just reconvene next week. Bye.